Hello, everyone. My name is Guy Wilkinson, Investor Engagement Officer, joining from the Australasian Centre for Corporate Responsibility, or ACCR for short. It's my great pleasure to be hosting this webinar today on the importance of grid-scale battery investment for Japanese utility companies. For those of you who are new to ACCR, we are a climate and financial research not-for-profit that's also engaged in shareholder advocacy work. We've already done a great deal of work in Japan and have been deeply involved in researching the country's utility companies and have previously co-filed shareholder resolutions at J-Power in 2023, together with HSBC and Amundi. The shareholder resolutions requested the company to set and disclose a business plan to achieve short and medium-term GHG emissions reduction targets, as well as report on how the company's remuneration policies will incentivize progress against those targets. This is clearly an exciting time for Japanese utilities and investors, and the evolving political landscape in Japan presents a great opportunity for investors around the world to engage with both companies and policymakers on the opportunity of battery storage. I'd also like to take some time to acknowledge country. I'm joining from the land of the Gadigal people of the Eora Nation, which is the land on which Sydney now stands. I'd like to pay my respects to elders past and present. In terms of agenda for today, firstly, we will hear from ACCR research analyst Isaac Pang. Isaac is the lead author of ACCR's most recent report entitled Future-Proofing Japanese Utilities, the Case for Grid-Scale Battery Investment. Isaac will be discussing key findings from the report, as well as recommendations for investors moving forward. Secondly, we're going to hear from Professor Hiroshi Takahashi from Hosei University. Professor Takahashi has expertise in power system reform and renewable energy policy and integration. Professor Takahashi also authors papers for the Renewable Energy Institute, for which is his main contribution for today's webinar, and we thank him for taking the time to join us today. A bit of housekeeping first. This webinar is being recorded, and we will be sending a version to everyone who's RSVP'd after this session. There will be time for a Q&A after the presentation, so please use the Q&A option to submit a question, and we'll endeavour to answer as many as we can. For any that we don't have time to get to, we do apologise, but please feel free to email stewardship@accr.org.au, and we'll facilitate a response from either Isaac or from Professor Takahashi. Translated speaking notes will be available in the chat shortly. I'm now going to hand over to Isaac Pang. Isaac, please take it away.
Thank you, Guy. So next slide, please. Thank you. So today I'll be sharing why ramping up grid-scale batteries is a major and still largely untapped opportunity for Japan's incumbent utilities. So throughout this presentation, we may refer to batteries that are connected to the electricity grid as grid-scale batteries, battery energy storage system, BESS, or BESS, or simply batteries. There are 4 key insights in this report. Japan's incumbent utilities already have a competitive advantage to deploy batteries in ways that create long-term shareholder value. Battery costs are also falling rapidly, down 65% over the last 6 years, and Bloomberg New Energy Finance, or BNEF, expects costs will halve again in the next decade. Batteries are already commercially viable in Japan. BNEF modeling shows that internal rates of return above 10% are achievable. Finally, deploying batteries will help maximize Japan's renewable potential, cutting curtailment or wasted renewable energy, and enabling the grid to make full use of its growing solar and wind generation. So I would like to emphasize, this isn't just about decarbonisation. It's about creating long-term shareholder value through prudent capital allocation, diversified revenue, and a transition-aligned business model. This presentation is divided into 4 sections. And the first section looks at why batteries are an opportunity right now. And in the next few slides, I'll talk about the falling costs, the system's need for more storage, and the expected scale-up of batteries. So to start with the left-hand side, global battery costs have fallen sharply as the technology has advanced. fundamentally reshaping their economics. Battery costs dropped 65% between 2018 and 2024, and BNEF expects costs to halve again by 2035. This would be a six-fold decrease in less than 2 decades. In Japan, the cost of building and operating new batteries will soon be cheaper than the cost of running existing LNG plants. You can see the crossover on the left chart here. By 2027, building and operating a new battery will be cheaper than running an existing open cycle gas turbine. And by 2031, cheaper than running a combined cycle gas turbine. Subsidies aren't included in these estimates. And so the crossover is likely to occur even sooner if current government support remains in place. Given these falling costs, batteries are emerging as a zero emissions solution for firming renewables and meeting peak demand. In this way, grid-scale batteries can reduce Japan's reliance on imported LNG, therefore supporting Japan's national energy security and clean energy transition. On the left, Japan has expanded variable renewables like wind and solar fourfold over the past decade and aims to reach up to 37% of the generation mix by 2040. But grid flexibility is lacking, limiting the system's ability to store excess generation and maintain stability as renewables grow. So Japan needs new dispatchable storage now. As shown on the right chart, curtailment, where excess renewable energy cannot be fully utilized or transmitted to where it's needed most, has risen sharply. Existing storage capacity provided primarily by pumped hydro is no longer sufficient to meet Japan's increasing renewable needs, and pumped hydro storage is not expected to increase through to 2050. Grid-scale batteries are a practical near-term solution to firm renewables and strengthen system reliability. Batteries currently make up only a small share of Japan's dispatchable storage capacity, about 1 gigawatt as of September 2024. But they already offer significant system-wide benefits. They can help reduce renewable curtailment by storing excess generation and shifting it to meet peak demand, ease transmission congestion, particularly near major demand centers, enhance grid stability through fast frequency response and voltage control, offer flexible deployment across an increasingly decentralized grid, as they are modular and can be sited closer to where they're most needed. Looking ahead, Japan's grid-scale battery market is set for rapid scale-up this decade. Based on market forecasts, by 2030, battery storage volumes are expected to rise 10 to 17-fold, and power capacity to grow 6-fold. This accelerating build-out signals growing confidence in battery economics and creates a clear opportunity for Japan's incumbent utilities to take the lead. Taken together, this makes grid-scale batteries an immediate viable technology for utilities to increase investment in. Now, we'll look at why investing in batteries is a strategic opportunity for Japan's incumbent utilities. Japan's incumbent utilities, the major regional electric power companies, or EPCOs, and the largest electricity wholesaler, J-Power, are uniquely positioned to lead battery deployment. They can use their competitive advantage to invest in batteries because they are regional monopolies that own most of Japan's generation assets and grid infrastructure. They have deep regional operational expertise, allowing them to forecast prices, optimize charging, and dispatch more effectively than foreign or smaller developers. And they have the financial scale and capacity to do so. So these advantages mean they can leverage existing assets and local knowledge to deploy batteries where they create higher value. At retiring coal plants co-located with renewables or near constrained transmission infrastructure. Utilities operating in constrained regions are particularly well placed to invest in batteries, as these locations offer both strong system value and higher revenue potential for storage. While Japanese utilities have strong operational and financial foundations, they continue to face valuation and leverage challenges. On the left, you can see that Japanese utilities have traded at a persistent discount to global peers, the domestic market, and their own book value. This reflects current investor skepticism about their ability to deliver long-term returns above the cost of capital. On the right, we see that, on average, Japanese utilities are more highly leveraged, with much higher debt levels than global utility peers. This may be a priority for these companies to reduce debt through more prudent capital allocation. Japan's traditional utility business model, which is built around centralized baseload generation and predictable demand, is increasingly misaligned with the country's decarbonising energy system. This creates several transition risks for utilities, and if they don't adapt, these risks may become more immediate. By contrast, investing in batteries offer a practical pathway to adapt business models and strengthen long-term returns. So in this third section, we'll look at how grid-scale batteries are already commercially viable in Japan, offering utilities a way to create long-term shareholder value through multiple revenue streams. There are two types of battery projects: capacity market-backed projects and merchant projects. Merchant projects earn revenue from market activities like energy arbitrage and by providing ancillary services. I'll go through each of these revenue streams in more detail in the next few slides. According to BNEF, both project types in Japan can already achieve internal rates of return above 10%, exceeding the typical developer hurdle rate of 8 to 10% required to justify investment in Japan. Capacity market-backed projects are commercially viable today, but they must return 90% of profits from other revenue sources to prioritize system reliability support and are not eligible for additional government subsidies. Merchant projects are commercially viable with government support. That includes a national subsidy that covers 50% of capital costs and a Tokyo-specific subsidy that covers up to 2/3 of the costs. Capacity market-backed projects are already delivering double-digit internal rates of return through participation in Japan's long-term decarbonisation auctions, which provide predictable 20-year capacity payments. Battery owners are paid for making capacity available to the grid, even if it's not used. These projects are generating strong returns. BNEF estimates that at current price caps, a battery project in the Tokyo region could reach up to 32% internal rates of return. These projects remain commercially viable under intense competitive conditions. So for example, the most recent auction was significantly oversubscribed, but BNEF estimates that even if clearing prices fell to half of the auction price caps, battery projects could still achieve internal rates of return above 10%. Despite this, incumbent utilities have not been awarded any battery projects in past auctions. Merchant battery projects are commercially viable today with subsidies, and according to our analysis, they could become commercially viable without subsidies as early as 2029. This means there's a narrowing window for early movers to take advantage of current government subsidies before there is broader commercial uptake. The energy arbitrage revenue stream allows battery operators to buy low and sell high by charging batteries when solar output drives prices down and discharging them when high demand or tight supply pushes prices up. As renewables expand, surplus generation and price volatility are increasing, creating more frequent arbitrage opportunities for battery operators. This chart shows how electricity price volatility has evolved over the past decade, from 2015 to 2025. The larger the colored bands, the greater the price fluctuations within each month, and the more often they occur. As you can see, price volatility has become much more pronounced. with the average daily price range more than doubling in the second half of the decade. BNEF expects volatility to remain high throughout FY25 and FY26, as Japan's grid continues to decarbonize and more renewables are integrated. Batteries are currently the most competitive technology for providing ancillary services in the balancing market. In this market, battery owners can earn payments for delivering rapid grid support that stabilizes frequency and balances supply and demand. As shown in this chart, batteries have secured significantly higher contracted prices than other technologies across all market segments, reflecting their advantage in delivering fast response services. According to BNEF's modeling, a 30 megawatt 4-hour battery in the Hokkaido region commissioned in 2024 could recover nearly 60% of its capital costs in the first year of operation. Projects in the region could also achieve internal rates of return up to 19%. But long connection lead times and some speculative applications continue to slow progress. To address this, Octo and METI are introducing measures to streamline approvals and improve market price signals, which should help accelerate viable projects. So we've seen how batteries can already generate strong returns through multiple revenue streams. So this last section looks at how strategically deploying batteries in constrained regions across Japan's grid not only supports system reliability, but can also create higher revenue opportunities. Japan's grid faces growing transmission bottlenecks in regions where limited line capacity restricts the flow of electricity between regions. Dispatchable storage like batteries is especially valuable because it can stabilize supply in demand centers and absorb excess renewable generation in export-constrained regions. In this map, the different colors indicate the severity of export constraints across regions in FY23. Japan's major demand hubs like Tokyo, Chubu, and Kansai often struggle to import enough electricity from neighboring regions, while high renewable regions like Kyushu and Tohoku frequently face export constraints. Batteries can play a dual role here. In demand centers, they can store energy during off-peak hours and discharge during peaks, reducing import dependence. In renewable-rich regions, batteries can store excess solar and wind energy when exports are limited, using it later to meet local demand to displace high-emitting generation, and relieve congestion by storing power until transmission lines are less congested. Japan's capacity market is designed to attract new flexible capacity where it's needed most, and the chart in this slide, illustrates. The price caps are higher in demand-heavy regions like Tokyo, where local firm capacity is needed to maintain reliability. They're also higher in renewable-rich regions such as Kyushu, where volatility and curtailment risk make flexibility especially valuable. These higher price caps reflect Octo's intent to attract more dispatchable storage capacity, like grid-scale batteries, to strengthen system reliability. Rising curtailment in certain regions also signals growing opportunities for energy arbitrage. If we look at the left chart, renewable curtailment has surged in recent years. It's highest in Kyushu, but it's also rising in Tohoku, Chugoku, and Shikoku, meaning more renewable energy is wasted because it can't be exported or used locally. A trend METI expects to worsen through to 2034. On the right chart, we can see that low price intervals, when electricity prices fall close to zero, have become more frequent across all regions in recent years. In 2023, Kyushu traded at the market floor for more than 12% of the year, equivalent to nearly 1 in 8 intervals. These trends indicate there are increasing opportunities for batteries to charge cheaply and discharge at higher prices in certain regions, capturing greater value. So this slide shows how batteries can help meet the need for fast response capacity across Japan's grid. The chart highlights significant procurement shortfalls in some regions. So shortfalls in gray are particularly large in major demand centers like Tokyo, Shibuya, and Kansai, where fast response reserves remain undersupplied. There are also major shortfalls in high renewable regions, such as Kyushu and Tohoku, where stabilizing services are in high demand. Batteries are ideally suited to meet this need. Utilities that act early can help provide crucial stabilizing services and fast response capacity while capturing higher revenue. So in summary, early investment in grid-scale batteries not only supports grid stability, but also allows investors to capture higher revenue or returns and secure strategic sites ahead of broader commercial uptake. Japan's incumbent utilities can leverage their existing assets, regional expertise, and financial scale to build a strong competitive position in Japan's growing battery market. Finally, battery investment can drive decarbonisation while creating long-term shareholder value. So the opportunity is real, the economics work, and the window is open. The question is whether Japan's incumbent utilities will act. You can access the full ACCR report and the Japanese translation of the executive summary on our website. Links to the report are also in the chat. So with that, I'll hand over to Professor Takahashi, who will share his insights on Japan's market reforms for renewable integration. Thank you.
Hi, thank you, Isaac. I'm Hiroshi Takahashi, Hosei University. So Isaac's presentation was an excellent overview of the grid scale BESS market in Japan. And from my side, as a researcher in Japan, Japanese researcher, I would like to give you complementary information about Japan's electricity market situation, especially focusing on the grid scale BESS. So next slide, please. So first of all, Japan is lagging behind in the renewable energy deployment. This chart shows the electricity mix of renewable energy in major countries. And Japan's electricity mix of renewable energy is about 26%, which is about half of those European countries like UK or Italy. So it's very slow to grow the renewable energy. So why? Next slide. I can pick up a couple of the reasons behind that. First of all, Japanese government has set a relatively lower priority on renewable energy. Its electricity mix target is 36 to 38% by 2030 and 40 to 50% by 2040. So those targets are already achieved by the above I mentioned European countries. And the government wants to keep other options such as nuclear and thermal as well. And more technically, there are three background behind the slow deployment of renewable energy. One is grid constraints. As Isaac shows the map of Japan, and the electricity transmission grid is quite limited in terms of the capacity. And also, as a rule, renewable energy generators are required to adopt the so-called deep connection charge for the purpose of the access to the transmission grid. And also, above all, transmission and distribution grid is not freely unbundled, so there are some grid constraints. Also, as for the renewable energy, electricity, there is a disadvantage in terms of the rules. Priority dispatching is not given to variable renewable energy, but on the nuclear and the other baseload electricity. That's why curtailment ratio of renewable energy is quite high, even though our deployment ratio is still low. And another reason is that price mechanism. We have opened market for electricity, but still it's not so much competitive. That's why price mechanism does not work well. For instance, no negative price is not introduced in the spot market of Japan. So we need more flexibility if we further integrate variable renewable energy. That's the basic situation of Japan. Then here comes the grid scale BESS. So this chart shows the grid connection application number of the grid scale BESS. And there are two steps for the grid connection application. One is the first step is for the purpose of the examination. And the second step is a more actual official application for the grid connection. And in terms of the examination stage, we have 143 gigawatt number of the grid scale BESS. It's huge number. And of course, application stage, it's about 1/10, but still 17.8 size of the connection application of the grid scale BESS. So actual operational one is even much smaller, but as Isaac mentioned, about 1 gigawatt or a little bit more is already introduced. But if you see this trend of the increasing number of the applications, more and more grid scale battery will be introduced year by year. So why does BESS get attention? Isaac explained to some extent, but one important factor from my standpoint is balancing market. Balancing market was introduced about in 2021, and then it's more fully opened since 2023. So, and as Isaac mentioned, BESS is very much superior in terms of the instantaneous response. That's why it's very highly valued in the market, balancing market. And also, government subsidy is quite generous to the BESS. About half of those capital cost is subsidized by the government. That's why it's a very lucrative business. And what I see very interesting is that who are the best operators? There are basically two types. One is the newcomers or renewable energy generators. They try to start best business after the so-called feed-in tariff boom. And they try to best co-located with renewable energy. Because now we are trying to move from feed to feed-in premium. That's why BESS is very important to maximize the profit of the renewable energy generation business. Second part is the incumbents. Incumbent utilities are traditionally they are very conservative, but incumbents are now very positive in terms of the best business. It's going to be a very new business opportunity for them, and they are very capable in terms of the best business. Why? Because they understand not just the generation business, but also they understand the market transactions. That's why they are kind of the all-round player in terms of the best business. That's why they are very positive to make investment in the best business, especially Kansai Electric is very positive to make investment in the best business. So next, please. That's the final slide. Kind of the sort of my conclusion. BESS is very promising business in Japan, and not only newcomers but also incumbents are very active to make investment. And also, at the same time, market designs are very important. And I, as a scholar, try to make policy proposals to the government For instance, we have to solve the so-called connection queue problems. And also, market rules are changing often. And so those operators have to be ready for the change of the rules in the market. So those two are my understanding. And finally, I haven't talked so much about the transmission grid, but the government is now trying to construct a new long transmission lines based on the government's grid master plan. Of course, BESS is very important source of the flexibility for the electricity market, power system, but also we need grid transmission grid as well. So transmission grid construction is also a very important opportunity for the investment. That's all from my side. Thank you for your attention.
Thank you very much, Professor Takahashi. Takahashi-san, I just wanted to jump in with a question that many people have been asking recently related to the politics in Japan. And this actually came up last week during the PRI conference. So with the recent change in government leadership, how stable is Japan's energy policy, particularly its commitment to renewables and storage? And what advice would you give to companies looking to pursue these opportunities?
Okay, thank you for the good question. Nice question. Prime Minister Takaichi. Takaichi is not so much pro renewable energy, but the energy policy is basically done by the Ministry of the Economy, and that policy will be continued. And so not so much pro renewable energy, but Ministry of Economy is very much pro for the best business. So the current policy will be maintained, and that's why we need some corrections on the policy, especially market rules. But policy situation in the area of energy will be maintained. That's my understanding.
Great. Thank you very much, Professor Takahashi. Just before we go to Q&A, we've had a few questions come through, so and it's not too late, so if anybody else would like to ask a question, please use the Zoom function to do so. But before we do the Q&A, I just wanted to draw your attention to the engagement questions for investors. I won't go through all of them now, as they can be found in the report, but if you have any questions on those, please reach out. We'd love to have a discussion with you, particularly the investors on the call, but anyone else, of course, is welcome to reach out. And I'll leave it at that. These can be found in the report, as I say. All right, questions. I'm going to stop the screen share just to make sure I can see all the questions. And the first one I've got is, if the economics are already strong, why haven't the incumbents meaningfully participated yet? Perhaps I can direct that question towards Isaac.
Thank you. Yeah, sure. I can answer that question. Thanks for putting that in. That's a good one. So some incumbents have announced or begun developing battery projects, but the scale remains limited so far. And the incumbents are still prioritizing legacy generation assets like coal, gas, and nuclear plants. So more battery storage can unlock more renewables, meaning investing in batteries would cannibalize their existing revenue base and asset utilization. But interest from smaller and foreign developers are growing as well. So if the incumbents don't adapt, they risk falling behind and face continued pressure to deliver returns above their cost of capital. Thank you.
Thank you, Isaac. And we've got a couple more here. So can you elaborate, please, on how batteries create shareholder value for incumbent utilities?
Sure, that's another good question. So transition-aligned investments like grid-scale batteries with double-digit internal rates of return would provide a new income stream for Japanese utilities with returns well above the cost of capital, which would create long-term shareholder value for these companies. And we think this would be a prudent destination of capital, given current return on invested capital of these companies are less than 5%. So this would help overcome the current investor skepticism and valuation challenges I mentioned earlier in the presentation. Thanks for the question.
Thank you, Isaac. And we've got a question from another investor here. What's next for the report, and what does ACCR intend to do afterwards, or as a next step?
That's a very good question, and I'm very excited about what's next as well. So we've been actively engaging with Japanese utility companies like J-Power, and we are looking to use this report as a foundation for engagements going forward. So we have a core group of investors that we work closely with, and we are always looking to bring new investors into that group. So if you would like to find out more about our work in Japan, I would encourage you to reach out to us. Thanks for the question.
Thank you, Isaac. We've got a couple, but I think they're very similar, and hopefully they've already been answered. But if they haven't, then please email stewardship@accr.org.au. And thank you very much to Professor Takahashi for your time. Just in case anybody didn't know, ACCR now has in-house climate scientists who are on hand to answer any questions you have regarding climate scenario analysis, physical risk, adaptation challenges, if that's something you're interested in as well. Thank you ever so much for joining us. We'll send out a recording next week. We hope you have a wonderful rest of the day if you're dialing in from Europe, and a great evening for all those in Asia Pacific. Thank you very much.